With all of the talk about recessions and market shifts, are you worried about what this means for real estate? Stay tuned. Thanks for watching this week's video. I'm Shirley with Shirley's Real Estate Group, John L. Scott, and this is the BS Real Estate Show, buying and selling real estate, that is. In last week's video, we talked about the economy to policy changes and how they're really impacting real estate. Today, we're diving into a topic that's on a lot of people's minds, recession, and what it really means for the housing market. So let's jump right in. According to Clever Real Estate, 70% of Americans are concerned about a potential housing market crash in 2025. 32% of those who planned a major purchase this year say they're now delaying it, including 1 in 4 or 22% who plan to buy a home and 1 in 8 or 13% who plan to sell a home. Business Insider said, though many Americans believe the housing market is at risk of crashing, economists who study the housing market conditions generally do not expect a crash in 2025 or beyond, unless the economic outlook changes. As mentioned by Chief Economist Mark Fleming, there's just generally not enough supply. There are more people than housing inventory. It's Economics 101. Now let's break down this data from Realtor.com. It shows that while the supply of homes for sale is improving, it's still not where it used to be. On the left, the blue bar tells us that inventory is up 30.6% compared to this time last year. That's a big jump, more options for buyers, which can help cool off some of the intense pricing growth we've seen recently. But here's the other side of this story. When you compare today's market to the pre-pandemic years of 2017 to 2019, it's still down 16.3%. So what does this mean? It means that while we're seeing more homes on the market, it's still not enough to fully balance things out or cause a crash. The bottom line is, more inventory means more options, but until we get back to those pre-pandemic levels, we're not looking at a market crash. We're just moving towards a more balanced market. Chief Economist Lawrence Yun says home price growth will moderate due to more supply coming onto the market. Having income and wages rise faster than home prices are welcome to improve affordability. Let's take a closer look at this data from FHFA. It's clear that home price growth is moderate. If you look at the far left back in February of 2024, we're seeing year-over-year home price growth at 7%. But as we move across the chart to February 2025, that growth has slowed to 3.9%. So yes, prices are still increasing, but at a much more balanced pace. This is a sign of the market stabilizing after years of rapid appreciation. Now keep in mind, this is the national average, and it's going to vary by market. Some areas are seeing strong gains, while other areas are flat or even experiencing small declines. But here's the key point. Even with this moderation, home prices have risen significantly over the past few years. In fact, they're up over 57% in the last 5 years, which is well above the normal appreciation rates. So are we seeing a slowdown? Absolutely. Are we looking at a crash? Not likely, because inventory is still tight. Without a major surge in supply, prices are likely to stay relatively strong. A quote from Freddie Mac: "We expect the pace of home price appreciation to moderate from the levels seen in 2024, while still maintaining a positive trajectory." And we'll wrap up with another quote from Lawrence: "There's just simply not enough supply. So the economics of supply and demand. If there's a shortage, Prices simply cannot crash. So question. Last week I mentioned how some headlines are doing more to terrify than to clarify. Which one has you most concerned? Let's connect. Drop your questions in the comments and I'll be sure to cover them in a future video. If you enjoyed this content, don't forget to like and subscribe for more real estate insights. Well, that's a wrap and I'll see you in the next video.